Hey traders, welcome back to another Sunday video. And you know what? It's actually the last Sunday video of the year. I've been doing these videos every Sunday where I go over trade setups and ideas for the week ahead for many years now, which is kind of crazy to say. But if you're somebody who regularly watches them and appreciates them, then I am really thankful that you're here and just want to say Happy New Year to you ahead of time. This will be the last Sunday video of this year, but there will be many more to come. Again, I enjoy doing these every week. So let's go ahead and jump into some setups, some ideas for the week ahead. And as we get started, I do want to also just initiate a little bit of an invite to you guys. If you're not already in our Telegram channel, they are free to join. And we share a ton of great value in here. So now there's two of us that actually create content in this channel. It's myself and Frank, but we are putting out trade ideas using the Edgefinder. You can see some of our trade concepts. You can see latest offers on stuff. I just wanted to invite you to join our Telegram channel. And also, if you're a stocks person, we actually just added a new stock and options Telegram channel that you can also join. Both of these are linked in the description down below. So take a second as we get started here, if you want more ideas beyond just the videos, to join our Telegram and or Discord server, which is linked in the description down below. Okay, so let's talk about this coming week. Now, of course, this coming week is another weird week. You have the markets closed for the New Year celebration, and then you kick off January. And this is a really important Sunday setup because, again, as we go into not just a new week, but a new year, things get interesting in markets. There are oftentimes some interesting moves that can happen in January. Oftentimes there's what is called the January effect, which is an interesting concept in markets. If you're talking about the stock market world in January, right, a lot of tax stuff can happen. So a lot of people hold off on selling their winners through the end of a year so that they don't have to pay taxes on it in the following year. Now, if you wait until the new year, you get to push off your taxes. So a lot of the theory here is that there's potential for some of the big names that have had phenomenal gains this year, like companies like Apple and Amazon. And if we take a look at like Nvidia, there's speculation by some that these companies, which have had phenomenal gains for people, there are many fund managers and investors who may choose to actually sell their holdings, realize those gains come January. Now, how much of this is worth preparing for? Well, we don't know exactly, right? We'll have to see what happens in January. They're going to start to become this big sell event where people are realizing those gains that they've been holding off on doing so for a while. I don't know. For me personally, we can still kind of just take a look at the macro. Like, let's take a look at a holistic view. I've been doing this as a reminder to everyone. The Edgefinder continues to have bullish readings on the NASDAQ, the S&P 500, Bitcoin. What does that tell you? That tells you, generally speaking, that the Edgefinder's perspective is and has been, also the Nikkei, which is the Japanese stock market, pretty risk on, right? Pretty favorable towards especially like US equities and the US dollar. Now, if we flip and take a look at some bearish assets on the Edgefinder currently, you have things like the Australian dollar, the 10-year treasury, the Kiwi dollar, Kiwi yen. So, I just wanted to point that out. Also, there's a lot of bullishness for the dollar right now. Take a look at pound US dollar getting a bearish reading. So we have a couple US dollar crosses that are actually making the list here today. So for the currency people out there, something to pay attention to. But when we take a look just at price action for a second here, I'll tell you where I'm currently positioned. Going into the new year, I remain bullish on US stocks and the US dollar until something changes. Right now, we have a Federal Reserve, which still seems, more poised to cut rates than it does to hike rates. We have corporate earnings, which are doing quite well. Inflation is at a much better place than where it used to be, and the consumer is doing a heck of a lot better than it was a couple years ago. Consumer sentiment is a lot better now than it was a little while ago, right? And inflation coming down has really helped with that story. So for me personally, that leans me into the risk on side of things with a stop loss, and that's the key component here. So I'm looking at stocks and I'm saying I like the upside. I'm looking at Bitcoin, I'm saying I like the upside. But that does not mean I am diamond hands hodling these things and hoping for the best, right? I'm tactically bullish. And so for me, when I look at something like the NASDAQ, which I already have a bullish position on, I would be less surprised to see this thing actually start to go back and take these highs, right? And to continue the rally in the new year, then I'd be more surprised to see it actually fall apart. It's possible that it does, right? Something could always come along in markets that shakes the boat and gets things, all sorts of scared again. But for me right now, the path of least resistance for markets is more upside. We're getting confirmations from the Edgefinder, and I think the key thing you want to look for on the indices is fresh highs. So we take a look at S&P 500, same story, right? We have these highs up around 6,100. The question is, can we recapture those areas and start to actually take out and move higher through those levels? So I'm going to look for those kinds of setups going into the new year. I was pretty adamantly supportive of buying the dip here on my channel during this big window that we had. I still very much like the story, and that is when I initiated a lot of the long positions that I picked up. By the way, if you want to know some of my current positions, I'll show those to you right now. So first of all, I'll show you some of my ETF positions. Now, I trade on a stocks and options brokerage, which is linked in the description down below. It's called Webull. You can check it out for yourself. It does accept U.S. clients and a couple other nations. There are several brokers in this description down below, by the way, and if you choose to use those links, they are referral links. But last thing I'll say about that is that all of the brokers linked in the description can be traded directly on TradingView, and they all have special sign-up perks to my subscribers. So if you are looking for a new brokerage, definitely pause the video and go shop in the description down below. There's a free gains for you guys. You can get free stock shares, deposit bonuses, all sorts of stuff. Just check out the description down below. So here's the thing. Couple positions that I'm in. Let's go ahead and start with, let's just go through the list. So EWZ is a Brazilian stock market ETF, which is not going too well for me. I'm down a little bit on that one. TLT is a bond ETF. This is a bit of a contrarian play. I want to talk about this just for a second. TLT, why am I long TLT? Especially when the Edgefinder actually has a bearish reading on bonds right now, which I have to defend myself a little bit here. This is simply a bit of a hedge for my other positions. TLT, in fact, I want to show you guys what happened to TLT, which is a bond ETF, in 2018. So in late 2018, some trade war stuff really flared up with China. And this was, the tariffs and round one of Donald Trump's presidential, administration. Well, TLT during that time absolutely skyrocketed. People got scared about the trade war, potential global recession, all that stuff. And TLT actually had a gain of about 36%. Meanwhile, at that same time, the stock market had a major sell-off. So I have a little bit of a hedge via TLT right now because with Donald Trump coming back into office, I'm not necessarily, thinking that there's going to be some major fallout between him and the rest of the world with all the trade war stuff. But if it does happen, actually, I was wrong about that. TLT actually at one point went up 65%. And that is pretty incredible for bonds. So, I have this in my portfolio as just a bit of a hedge in case we see that scenario play out again. TLT is a bond ETF, so it also does pay a nice dividend. So I get paid just to hold the position. That being said, I do have to address that with the Edgefinder giving it a bearish rating, it's not something that I'm trying to time. In fact, it's a dollar cost averaging thing, and it's mostly just a bit of a hedge in the portfolio. Because if I was actually trading this on a short-term basis, I would actually probably lean bearish. Right now, there's a lot of things that don't look great for TLT or bond ETFs in general in the short run. So for me personally, this is a bit of a hedge in the portfolio. It is somewhat of a way to just kind of keep cash almost just on the sidelines for new positions. But if I continue down the list, the reason I have the TLT as a bit of an anchor in the portfolio is because I also have some very high kind of risk side things. I have IBIT, this is a Bitcoin long position, semiconductors, SMH, NASDAQ, which is QQQ, and MCHI, which is a Chinese stock market ETF. So I have plenty of risk on positions, and TLT is a classic risk off position to just slightly hedge the portfolio should we see a bit of a growth scare, recession concerns, and or trade war stuff. I also have many options trades on right now. And just so you guys know, every single one of these trades that I've just shown you, I share all of them inside of our Discord channel. So anytime I take a position, whether it be the NASDAQ or a Forex trade, I have several Forex trades on as well, like my dollar Swiss position. Anytime I take a new trade and it gets shared, it goes directly to our members within the Discord server. You can also see Frank's trades, Chris Pulver's trades, Ivan's trades. All of these are being shared to our members. And I do want to just, kind of highlight that when I show these trades, what's important is that I also show the live accounts that I'm actually trading. A lot of signal services, they do not show you their actual performance, their actual portfolio. And I find that to be very important in what I do. So if you are serious about finding a better community in 2025, take advantage. Down below in the description, there's a promo code for you that will also get you a discount on the group. If you're interested in joining us ahead of this coming year, I highly recommend it. We do offer lifetime memberships, which basically just means you pay once to get in and you don't have to pay any monthly fees or anything like that. So use that promo code to give you a nice discount on it, and you can come join us and trade with us in 2025. Again, every trade that I'm taking gets shared, but more importantly, it's not a copy service. It's a service where you can actually see the trades that I'm taking, but more importantly, why I'm taking them, right? When am I entering? Why am I putting a stop loss here, right? What concepts go into a trade, right? So if that sounds like something that would benefit you, if you're like, look, I'm struggling to find consistency, maybe it would be helpful to actually look over the shoulder of somebody who has done this for many years, who has proven results. And again, I am patting myself on the back here, but it's genuinely really important that you as a trader consider this. What you're looking on the screen at right now is my all-time performance in my public portfolio that I use Webull. So all these trades, right? Everything that I'm doing, this is my personal brokerage account, logged in, no nonsense, no BS. Again, when you see signal services out there that are touting themselves and talking about how much, they made 1 million pips or 15% every single month or anything like that, you're probably at the point like I am where you're just like, you squint your eyes at that stuff. You're like, nah, that's not real. But again, I'm showing you my real account, not to show you that I'm the world's greatest trader, but that I'm a real trader and that I actually do this stuff. And if you're struggling out there, I'm telling you, being able to look over the shoulder of people who are doing it may genuinely be the difference of you actually getting to a point where you're learning something and improving as a trader rather than just going in circles chasing strategies that you find on YouTube. So take advantage, the promo code down below in the description. Come join us for 2025. Let's make it a great trading year. And there's your sales pitch for the day. I know, the thing about sales pitches on my channel is I will always have one for you, and they will always be as genuine as I can make them. I do sell things on my channel. There's no question about it. But I personally have this thing with everything that I sell, quote unquote, with my company, A1 Trading. My policy is if we're going to sell it, it would have to be something that I genuinely would buy myself. And I can stand by that with the Discord, with the Edgefinder, with our software tools. Everything is, again, something I would purchase myself. So anyways, just moving on here, we'll continue. Back to indices for a second. So all the indices are not even here, right? So you take a look at the NASDAQ. NASDAQ to me looks really healthy. But then you look at the Dow, and the Dow looks really sleepy. It looks really tired, right? You had this really big sell-off, came back up into this area. We're hitting some resistance here. Dow Jones just does not look as, kind of dominant as it perhaps did a couple weeks ago. So for me, with the Russell and the Dow Jones, which are really just not looking as attractive, I'm very much just going to stay on the sidelines with this one. And I'm going to stick with what's working, which is tech, NASDAQ, Mag 7, right? The big companies, Apple, Amazon, all those things. They're just dominating and kicking butt. And again, that will change at some point where they're not leading the market every single day. But for now, and for the last few years, that's been a really good strategy for me, is just to stay with the winning play, which is long NASDAQ. Now, again, NASDAQ is not perfect. And I always make this point because people are probably starting to believe that the NASDAQ is an easy thing to trade when it's in fact very difficult to trade. NASDAQ, when it goes down, is vicious, right? A NASDAQ sell-off, tech sell-offs are some of the ugliest things in stock market history. So just be careful that, you're looking at NAS. If you believe that it's just easy money, you haven't lived through the downturns in the NASDAQ, which are very vicious and very difficult to trade. So for me, though, I'm going to play it while I can. Moving averages still look very nicely intact. We have a nice upward bull trend going on right now, and we're about 2 years into this bullish trend. And I think we have plenty of room to continue until that changes. Again, path of least resistance for me is to stay looking long, stay looking for pullbacks, and buy in dips like I did here. So let's take a look at gold here as well. Taking a look at gold, really have been saying the same thing over and over on gold. It's been stuck between this range of resistance and support areas. What I'd be interested in seeing is going into 2025 with the election or with the inauguration, Donald Trump taking office once more. The question will be, can we get some actual, kind of momentum to form one way or the other? I don't really have a strong bias on gold at this time. If it breaks to the upside, we may look for longs. And if it breaks to the downside, as long as there's a good fundamental catalyst, we may look for short setups, just betting, that continuation could actually start to take place. Really not a big fan of gold trading at this time, and this is why I don't trade one thing. I trade many things. Gold is currently getting a very neutral reading on the Edgefinder, which keeps me really, really uninterested in taking longs or shorts. That being said, I do have transparently one position. If we go over here and take a look at our positions here, take a look at GDX, I do have a gold miners ETF sell put position that I've done, which is not looking great right now. It's down $550 on me, but GDX, if we take a look at, let's go GDX, the gold miners ETF here was looking a bit oversold. I sold puts here around $35 per share. And at this point, if the shares are basically at or below $35 by expiration, which expiration is the 17th of January. So if at the 17th of January price is at or below that, I basically have to buy the shares at $35. Now, what do I get out of this? Well, as a sell put position, I collected a premium for selling that bet to someone else. Someone else basically wanted to bet that GDX was going to drop a whole bunch. And I said, okay, well, if you're right about that, I'll buy the shares from you. And in return, I get paid a premium up front. It's the beauty of selling options, and it's something that I've done for some time now, and it has really helped to smoothen out my personal equity curve. We can also take a look now at the Commitment of Traders report, which I like to look at every week. Basically, this is institutional money flow. What are they buying? What are they selling? According to the CFTC's report here. So if we take a look at this, gold continues to be the most heavily bought on a proportional basis, long positions wise. Gold is very heavily long. Silver, NASDAQ also topping the trend here for stock indices, which I thought was really interesting. U.S. stock indices. Dow second place, and the S&P 500 way over here. So, and then most bearish things, you got CAD, Kiwi, Australian dollar. I find this really interesting. The US dollar continues to kind of be one of the favorite currencies here on the list in terms of institutional positioning. That being said, we can also take a look at the latest filing. This is kind of more of a long-term indicator up here, and this is more short-term. So this is the latest buys and sells. We see there was a big accumulation of the dollar. They reduced short contracts and added long contracts. Swiss franc, they added long contracts, reduced short contracts. So some interesting moves there. SPX, they also accumulated more positioning on the long side. US oil, silver, gold, right? Euro, Bitcoin, there was some net inflows, some bullishness there. NASDAQ was really kind of mixed. They added shorts and they added longs. Take a look down here at the bottom of the list, and you had a whole bunch of currencies selling. Kiwi dollar, the Australian dollar, and they sold more yen. I discussed this in a recent time that the yen was looking interesting. In fact, as an Edgefinder user, if you do have the Edgefinder, head over to your COT data history page and filter for Japanese yen. And you can actually do this study where you can look at the recent change. What I find interesting here is that there's been some change in the wind, right? There was a lot of buying going on in the Japanese yen, and then there's been some more recent selling that has come in to the Japanese yen. I do also want to mention when it comes to the COT report that there is a bit of a delay here in this. This is December 20th was the last updated data point, and with the holiday season, this can get even more delayed as, again, during the holidays, people who do all the work behind the scenes for this report may take extra days to put it out. So you can find more information if you go to the CFTC's website. And of course, the latest pull will always happen for the Edgefinder within the day or so. So once that new data comes, you'll have it in the Edgefinder's COT report. By the way, if you want to try the Edgefinder, there's also a link in the description down below for this tool. It is our bread and butter, our pride and joy here at A1. We build all sorts of different tools, but the Edgefinder is Our number one seller, everybody loves the Edgefinder. It has so much data here, whether you're a sentiment person, seasonality person, economic data, labor statistics, inflation data, interest rates, all sorts of stuff. And of course, it strings it all together with the top setups algorithm, which shows us some of the top ideas based on what the data is generally telling us. So definitely try out the Edgefinder if you have not already. We also have the new tool, the stock box. I've been playing around with this more and more on videos, especially if you're somebody kind of interested in stocks. I have a lot of stuff that I'm watching here for the new year. I discussed this past week on my channel how I'm not a big fan of Apple stock specifically because it is very expensive relative to its own recent history. So what we're looking at is the price to earnings, which is using the 12 previous months to get an idea of how expensive is the stock. And what we can see here is that it's trading quite expensive. But then you have other companies. I specifically was looking up Nike, right? So Nike is a stock that I'm kind of interested in going into the new year. You can actually see the opposite effect for Nike. Nike's been out of favor, and actually its valuation relative to its own history has actually been going down. So I like this for a possible stock to watch into New Year's. So yeah, Stockbox, highly recommended. You also try out the Edge. If you have the Edgefinder already, you might want to try the Stockbox if you're a stock person. I, of course, trade like everything. So having the Stockbox and Edgefinder is kind of the dream. You can have all this data in one place. And I should just make a note, the Edgefinder is still the Stockbox is still very early days. A couple of years ago when we first launched the Edgefinder, which is our Forex and indices and commodities and stuff scanner, it looked way less cool than it does today. Same with the Stockbox. The Stockbox already looks cool, but it's going to look way cooler. And to be completely transparent with you, if you're watching 22 minutes into the video, then you're a real one. I appreciate you. We're going to raise the price in the Stockbox. The Edgefinder has been, initially the price was lower. It has come up over time. But the Stockbox is very low priced right now, and we do that intentionally. The low cost makes it, something that we recognize the tool is not fully complete. It's got many tools and features that are yet to come. So we price it at a lower price. We use those funds to pay for development, and eventually we'll have a really powerful tool, and you'll still have access for that low initial cost. So we grandfather in people who buy it at a low price. And also the last thing is it's not a subscription model. So the Edgefinder and Stockbox are one-time payments to get access. So if you'd like to use the promo code in the description, you can get access to both the Stockbox and the Edgefinder for very low prices. That's all I've got for you guys today. Happy New Year's if you don't see me before then, or hear me, I guess, since I'm not on camera right now. But thank you guys very much for tuning into today's video. Definitely remember, check out all the stuff we've got in the description. There's free stuff and, of course, the paid stuff as well with the promo code down below. The promo code, by the way, if you can't find it in the description, is YTVIP. Use that at checkout anywhere, and you will get a nice discount on whatever you want from our tools and from our team at A1. Thank you guys. Have a great week ahead.